Okay, so good morning. My name is Jason Weisberg. I am the Executive Vice President here at Value Line, and I want to welcome you this morning to our professional webinar series. Today's topic is on the Value Line Pro ETF Research Service. This is a fairly new service that Value Line has launched, and we're going to take maybe about 15 minutes today just to go over the summary of the service to give you an idea what it has and see maybe if it'll be a fit to help you out. So just a couple of housekeeping items. Again, as I mentioned, we keep these fairly short. We do the pro webinars monthly. They last maybe 15, 20 minutes. Questions are handled via email. So if you look on your screen, you can come up to customer service portal right here, click on that, and then contact us, and you'll be able to go to a short form and fill it out and just send us any questions you might have. If you're already a customer, you can also contact your institutional specialist directly, and they'll be happy to help you out. But if you're a prospective customer, the probably best course of action is to come here. We also have a phone number that you'll see listed on the top right here, 800-531-1425. That's direct to the institutional desk, and we could also help take your questions via that. So to give you an overview real quick, Value Line, we've been in business over 88 years. We cover asset classes such as equities, options, mutual funds, ETFs. We have a whole host of model portfolios, and we have two other streams of business, which are quantitative strategy portfolios and also the sale of raw data feeds, both fundamental and estimates and projections. So if any of those services or catch your eye, or if you need something, please go to valuelinepro.com, like you see on your screen. You can learn a lot more about our products and services, and you can also contact us to learn more. At the conclusion of the short presentation regarding the ETF service, I will go into detail one stock recommendation that was handed to me this morning by the Executive Director of Research, and is recommended by our research department to see if it'll fit your portfolio, and I'll go over some prepared remarks to show you that. So let's kind of dive into the service. If I switch tabs here on your screen, you see I've already signed in to the Value Line Pro service. You're looking at the dashboard here, and the best place to navigate anywhere is right here, the quick link box. And anything that you have in blue will be active in your subscription. If you see something in gray, it will not be included. And we'll give you a little message. If you notice here, for the gray one, it'll pop, it'll say the product is not part of your subscription. So there's two pieces to the Value Line Pro ETF research. The first piece is the ETF Select, which is right here. It can be found ETF Select or Select ETFs, as it's written in the quick links. And then the second part is the new ETF service. The way this works in partnership with each other is you can purchase these as a package, a complete package, but we also do sell these a la carte. So if you did want just the Select ETF service, you can get that. And if you did just want the new ETF service, you can get that as well. I should mention, if you are a Research Center subscriber, the new ETF service does come included in that service. So you'll get that automatically. And the only other piece you would need if you wanted to be complete would be the Select ETFs. But again, the Research Center has the new ETF service, along with also the Pro Premium, the Special Situations portfolio, the mutual funds, and the options. That all comes together in the Research Center package. So let's first take a look at the Select ETFs. If I click on that link, you'll see it'll bring us to the home screen. You could look at the most current report, which is right up here. And I should mention, this is a monthly service where we take a deep dive into one particular ETF. We're going to give you a multi-page report that's going to talk in depth about that ETF. We will rank it, we will comment on it, and we'll describe how we think maybe it will be something that you might want to consider in your portfolio. Down here, you'll see there's the historical reports or the back issues. So if you click on that, you'll have access to the previous ones, okay, April, March, February, and so forth. So you could always go back and access it. Now you can see June's is already published. June 1st is Monday. So let's click on that and take a look to see what these ETF Select product looks like. So as I mentioned, it's a multi-page report. It's in PDF format. And as I slowly scroll through, we'll just give you an idea here. So we're going to go over kind of the state of the economy, a macro level look at how things are going out there. We're going to talk in detail about this month's recommendation. In this case, for June, we're looking at iShares Global Consumer Staples ETF, or the ticker is KXI, and that's the one we'll be focusing on today. We'll also take a look at an industry, so household products, look at the top 10 holdings of the ETF, look at a key holding in that ETF, which in this case is the Coca-Cola company, and then we'll talk about some previous selections, and we'll talk about how they're doing. Another dive into some of those. So if I scroll through this, as I mentioned, we're going to start off with the state of the economy. And what we're going to do in this point, since it's just a simple PDF, I'll just scroll through a little bit and just give you an idea. And then we go into this month's recommended ETF. And as I mentioned, it's iShares Global Consumer Staples ETF, which is the ticker KXI. We gave you some obvious, metrics on the ETF itself, where it's traded, who's the issuer, what geographic area does it cover? In this case, it's global. What is the underlying index, and so on. As we continue to scroll through this report, we're going to get into the deep dive of the actual ETF. We'll speak about some of the holdings it has, investment considerations, and we'll give you an overview about how we feel about this ETF and why perhaps it should be a fit or not a fit in your portfolio. We'll give you some structural integrity numbers, all right, expense ratios, concentration risk, market impact. These are really good figures to use if you're a little bit of what I call a data junkie and you really want to take a little deeper dive into the ETF. These are some great metrics to take a look at. The annual yield, in this case, 2.36%. What's the average number of components? 90 in this case. We'll look at some more investment metrics like ranking and standard deviation. And these are all good things to help you make an informed decision. And then we'll talk about the industry, in this case, household products. We're going to do a focus on this in this month's report. Talk an overview about how that industry is doing, how would it affect that ETF. And again, I'm just slowly scrolling through the PDF report. You kind of get the idea of what the select service is. Again, a report that's going to list a whole host of things. Here you start with the top 10 holdings of this ETF. We'll get into the company name, what the weighting is of the ETF, the sector, what industry that ETF is in. So in this case, you see Nestle is a huge component of this at 9.48% weighting in this particular ETF. And then all the way through, you'll see some names like Coca-Cola, Costco, Meta Financial, and so forth. And then finally, as we mentioned before, we'll take a look at one of the key holdings. In this case, we're going to take a little dive into Coca-Cola. What we like to do is take a deep dive into one of the holdings just to give you a better sense of what this ETF is holding and how one particular company may or may not affect the ETF itself. So in this situation, Coca-Cola, which I believe is one of the stronger companies holding up through this pandemic right now, but you'll see the industry it's in. We'll give you the ticker, obviously, and some basic data on the underlying company itself. And again, as you notice, as I slowly scroll through, it will go into this company as well. And then finally, after we get through a deep dive of one of the key holdings, we'll give you updates on our previous selections. And in this case, we're taking a look at iShares Genomics, Immunology, and Healthcare ETF, iDNA. We're looking at another healthcare ETF, the U.S. Healthcare ETF, IYH, telecommunications, and so forth. And we'll just give you a little blurb on how some past recommendations are doing. If we pause here for a moment and take a look at the stocks, SOXX, you'll say it's risen slightly since our February recommendation, outperforming the S&P 500, although trade tensions between China and the United States have recently flared up again and presented another risk. We believe the recent spike in tensions is reversible and view semiconductor stocks as an appealing option for venture some long-term buyers, and we give it a buy rating right now. So this is a good overview on this report. Again, it's a PDF. It's out there for you to see. If I go back, you access it through the link on the quick link box, and it'll take you right to here where you can see the current and the past reports. Fairly simple, fairly straightforward. You can purchase this on its own, or again, you can purchase the Pro ETF research package together, and this would be one component of that package. So if we go back to the quick links on the dashboard right here, we're back to the quick links box here. And as I mentioned, this is the best place to navigate right here, the quick links. We're going to look at the second piece of the Pro ETF research, and that would be the new ETFs service. So if I click on that, what this service is it's a screener, and it's a way to get quick reports on individual ETFs. So if we pause for a moment here, you'll see what looks like a basic screener. It's going to have different criteria. On this left-hand side right here, you can select your categories, and over here will be the metrics within that category that you can put in right here, different metrics or criteria of that to get to. So for example, let's just say asset type, I want it to equal equities. I want performance for 3 months to be greater than at least 1%. I would click on add to that. I would come and I want to say I want this to be passive. I'll click on add to the screener there, and then I'll take my 1% and add it there. And if you notice up here, it tells you so far I have 3 pieces of criteria that I'm building this screen for. I can then get into everything else like fundamentals, portfolio composition, performance numbers, fees or expenses. You get the idea, and then you can quickly just add this in. If I'm happy with the criteria I've chosen, I simply am going to click on this green button right here that says run screen, and let's see if anything pops out, and it does. So based on the criteria I've given, there's 67 matches, and here starts the list of all the companies, those 67, ETFs. I've confused that with the equity screener, but the results are 67 ETFs that match the screen that I did. You can quickly just export this to Excel using the CSV button right here. You can copy this, you can print this screen, whatever you'd like to do. And if I scroll down, you can say, hey, show me 100 on one page, and then we'll have all 67 listed in one easily scrollable list. Okay, you can easily click on the hyperlink right here, which will load that report. Okay, or again, as I mentioned, the most popular thing people are doing, obviously, are they're taking this link right here, the CSV link, and it'll bring it into an Excel format. Now, if you do click on any of these hyperlinks, it's going to load up a report that looks like this. And this is the one on DIA that it is preloaded. So for the webinar here, and this will give you an idea of what an ETF report would look like. So we do rank these on the same 1 to 5 scale that we rank our equities. So the ETFs, again, will be a 1, 2, 3, 4, or 5. And just to refresh or explain to those who may not know, a 1 and a 2 will indicate a buy scenario, a 3 would be a hold, and a 4 or a 5 would be a sell. Now, the one thing I would mention is if something's ranked a 4 or a 5, this is not a short scenario. This is if I am long the position, I might want to think about either paring it down or eliminating it altogether. If you are not long the position, our 4 and 5s do not indicate going short on an equity. I would also note at this time, for those of you who may not be that familiar with Value Line, we are designed for a long-term value investor. If you're someone who moves in and out of positions fairly quickly or often, Value line research might not be the best fit for you. We really look long term, 12, 18, 24, 36 months out is where we're looking and guiding our clients to. So if you take a look at this report, you'll see the name up here. We give you a kind of a risk assessment right here. In this case, it's medium. As I pointed out before, this would be a 3, so it would indicate a bit of a hold scenario. And if you scroll through this report, you can see it's printer friendly. You can share this with a client. That ability does come with the professional license. If you did want to share these reports, you can do that on a one-off basis. You just can't mass redistribute our reports. We'll talk about things like the holding breakdown. The performance will be on here, a 5-year comparative chart. We'll give you the top 10 holdings. As you notice, this is very similar to the ETF Select report. It's just a 2-pager versus our 3-pager versus that multi-page in the ETF Select. So if I go back, you'll see here's all the key metrics that you need to see. In this case, fundamentals, we're going to look at the one ETF we have. We'll also compare it to some other ones. We'll give you rank, the price. So this is a nice quick comparison chart if you wanted to see other ETFs that are perhaps like it, okay, and you want to do a quick side-by-side comparison. Again, PDF format, very easy to use. You're looking at the top 10 holdings here. Towards the left of your screen, they'll be sorted by weight. So you'll see Apple is the biggest component of the DIA at 8.72%. Boeing represents 3.7% to round out the top 10. Again, printable, you can share it, very easy to use. Okay. If I go back to the screener, you would simply just navigate the screener up here in the green bar heading by clicking on a new screen, edit the criteria you have at the moment, or if you want to just go quickly into a ticker search. So if I click on ticker search, you can just come in here. You can put in any ticker you want. In this case, let's just throw up SPXL and click on get a report, and then up will pop the report for that particular ETF. It takes a moment, but here you go. Working remotely, as I'm sure a lot of you are, so I appreciate you bearing with the speed. So ETF, this is a rank 1. So the XPXL, which is a daily S&P 500. So this is a triple. So be careful if you do look at something like this. It's 3 times shares. Direction is known for those triple plays. But right now we give this a rank of 1. It's a leveraged ETF. And again, same kind of report as the DIA that you saw, gives all the prime features. So that will kind of conclude what we have here for the Pro ETF service. Just to review, if you come back here and we come to the dashboard, if you're an existing subscriber and you have access to this or any other service, the dashboard is where you're going to want to go to navigate, and then the quick links box. Anything in blue, again, is part of your active subscription. Anything in gray is not. I would encourage you, if you are interested, ValueLinePro.com has information on these products right here. Okay, so you can look at the Pro ETF package as I just went over, and this kind of just gives you a quick overview of what I just covered. You can contact us to learn more. We do have screeners available for other asset classes like equities and mutual funds. So if you are interested in the equities or mutual funds, we do have screeners similar to this as well. At this point, I am going to conclude. We went about just under 20 minutes, which is good. I want to thank you for taking a couple minutes out of your day to join us. Oh, but wait, before we go, I apologize. I have one thing to do. I did mention we have a recommendation, so I'm glad I caught that. So let's jump back and quickly pull up the ticker G. If you look on your screen, the recommendation for the webinar today is Genpact. And before I go, I'm going to just read some prepared remarks from our research department on Genpact. And what we do is on each month of these webinars for pros, we do make one recommendation and go take a little quick deep dive. So let's take a look at this one. So although the country is starting to open back up, which has led to a sharp stock market rebound, the coronavirus continues to devastate the economy. The nation's gross domestic product declined 4.8% in the first quarter, and in the current interim, we would not be surprised if GDP plummets 30% or more. These difficult situations do, however, create investment opportunities, and the Value Line Research Department recommends that our pro subscribers take a look at Genpact, which is ticker G. And that's what you see up on your screen. And if you could see here, ticker G has a safety ranking of a 2 and a timeliness of a 2, which both are buy indications. The Bermuda and New York headquartered corporation provides business outsourcing and IT services. Its offerings include handling its customers' accounting, cost management, financial planning, invoicing, and collections tasks. The company also provides analytics, research services, and data security. Genpact has 87,000 employees and a market cap of around $6.5 billion. Up until 2004, the company has a wholly owned subsidiary of General Electric. So if I scroll down a little bit, I'm going to bring up the valuation module while I continue these prepared remarks. The company's diverse solutions are helping it mitigate losses amid the pandemic. Genpact has exposure across multiple end markets, many of which are likely to be hurt by reduced consumer spending. However, services to clients that deal in non-discretionary businesses like finance, sourcing, and supply chain management should help the company weather the storm better than most. In fact, Genpact beat our top and bottom line estimates for the first quarter. And for the full year, we expect revenue and share earnings to increase 6% and 5% respectively compared to 2019 tallies. The situation should also meaningfully improve in 2021, where we anticipate a 20% earnings advance. And before I continue, let's look at some other things. Let's take a look at the sales module here. So lately, countless companies have taken on more debt, slashed or eliminated their dividends, and reduced headcount, among many other initiatives to shore up their finances. Thus, balance sheets have quickly deteriorated. Now, Genpact, on the other hand, has not had to make those difficult decisions since its financial position has remained solid. As expected, it declared the regular cash dividend payable in June. At March 31st, the company had more than $400 million in cash and a reasonable level of debt. In our view, Genpact will have little trouble servicing its financial obligations. And as we conclude, let me just bring up one last module. Here's our 3 to 5 year projections. So as for the equity itself, we think it offers broad appeal. Although the stock market is now well off its recent lows, it is still trading roughly 20% off its 52-week high. The current entry point appears favorable. According to our analysis and proprietary metrics, the issue will outperform the broader market over the next 6 to 12 months. Longer term, it should also achieve worthwhile returns. Just as important, Genpact maintains some favorable defensive attributes should the stock market fall anew. All told, we think the stock will make a fine holding in most equity portfolios. So that concludes the prepared remarks on Genpact. At this time, it also concludes the presentation on the Pro ETF service. Again, my name is Jason Weisberg, Executive Vice President here at Value Line. I want to thank you for your time today and for spending a couple of minutes with us. Enjoy the rest of the day and happy investing. Take care.